Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the first quarter of 2023, and that stock is Coca-Cola. And this is a really popular dividend-paying stock in the stock market. As we can see from this chart right here, they're up around 1% over the last, or they're down about 1% over the last year. Same time period that the S&P 500 is up around 3 to 4%. So they are underperforming the market, but we're going to see in this video how this could potentially be a good buying opportunity for Coca-Cola based on some of the current news that recently came out surrounding the stock, as well as some of their financial statements, their earnings growth, and then we're going to use a discounted cash flow model to figure out the intrinsic value per share for Coca-Cola. So right out of the gate right here on this article, they talk about Procter & Gamble versus Coca-Cola, but I'm mainly going to be focusing on the statistics and the talking points for Coca-Cola in this article. They point out some key points here that both of these companies are highly profitable. They've both been steadily growing their dividends over the past decades, and they have a few differences that distinguish them. And so if we scroll down here, I highlighted some of the key points I want to cover. And to start off, they point out right here that Coke has some really good sales trends at the moment. The beverage giant recently started increasing the prices of their beverages in order to boost sales. So that contributed obviously to their revenue growth, but on top of that, their sales volume globally also grew. So their revenue didn't only increase because they increased prices, it also increased because they were able to sell more units. On top of that, in comparison to some of their competitors in the industry like Pepsi, Coca-Cola has a 28% operating margin, which is more than double the rate that Pepsi enjoys. On top of that right here, they point out that on their cash flow statement, Coca-Cola has a really good cash flow, so they have a lot of cash that they could direct towards returning value back to shareholders in the way of dividends and stock buybacks. And their share price is currently priced at about 6 to 7 times sales, so not bad in terms of stock pricing at the moment. Also, to end off this article, they point out that Coca-Cola has a premium stock valuation in comparison to some of the other companies that are available in their industry and some of their competitors. And so as a result of that, they do have a little bit more of a downturn, potential downturn, if there is a contraction in the market. So that is something to keep in mind if you're holding onto shares of Coca-Cola, because if there is a contraction in the market, then their stock price could take quite a big tumble, similar to how it did in 2020, the start of 2020. And so right here we can see their financial statements. This is their income statement, and they had some pretty good revenue and earnings growth. We can see that year over year for the first quarter, their revenue grew from $10.4 billion to around $11 billion. So that's an increase of around 5% year over year. And then if we look at their bottom line and net income right here, attributable to Coca-Cola shareholders, that increased as well from $2.7 billion to $3.1 billion. So that's an increase in their net income of 12%. So not only did their revenue increase, but their cost of goods and their operating expenses increased at a slower rate than their revenues increased. And so as a result, their net income ended up increasing even faster than their revenues did. So right here on page 7, we can see their balance sheet. Total assets are up from $92 billion to $97 billion. And we can see that the majority of their business is financed by liabilities compared to equity. They have $26 billion of total equity. And of that total equity, they reinvested around, or they have around $72 billion of reinvested earnings, which is up from $71 billion in the prior period. And lastly, as the article pointed out, they have a really healthy cash flow statement. Their operating cash flow for the first quarter of 2023 was $160 million, which is down from $623 million, but still a pretty hefty sum of cash. And then on top of that, in their financing activities, we can see they paid out $100 million of dividends, which is down from around $2 billion of dividends in the first quarter of 2022. And then they also purchased stock for treasury amounting to around $800 to $900 million, which is up from $500 million 1 year ago. So they are prioritizing returning value back to shareholders, which is pretty typical of Coca-Cola stock. And so right here we can see this is a discounted cash flow model to figure out the intrinsic value per share for Coca-Cola. Yahoo Finance is estimating that the company is going to grow at around 6% for the next 5 years. They had around $9.5 billion worth of free cash flow in 2022. They have a net debt position of around $30 billion and around 4 billion shares outstanding. That puts their estimated intrinsic value per share at $22 per share, which compared to their current share price means that they are definitely not trading below intrinsic value per share based on these current metrics. And obviously, as the article pointed out, they were trading at a bit of a premium at the moment, which is one of the risks because their stock is vulnerable to a big contraction in the future potentially. And so right here, I compare them to some of their competitors in their industry, Pepsi and Keurig Dr. Pepper. We can see that they have the best gross profit, net profit, and return on assets out of the three companies here. They also have the lowest price to earnings ratio. The other companies are priced at a higher price in comparison to their net income. And then they also pay a pretty competitive dividend of $1.76 per share. Keep in mind that this is dividend per share. So even though Pepsi's dividend per share is $4.53 per share, I believe Pepsi's share price is also almost 2 to 3 times higher than Coca-Cola's. So you do have to keep in mind not just dividend per share, but also the dividend yield. And Coca-Cola's dividend yield, I believe, is higher than Pepsi's, even though Pepsi's dividend yield has been growing at a faster rate historically. So in terms of comparing them to their competitors, it looks like Coca-Cola from a profit margin perspective is definitely doing really well, and they're obviously paying a very competitive dividend, and they're priced really well in comparison to their competitors. And to end the video off, I wanted to compare Coca-Cola to some of the other companies we've looked at in the past. At the moment, they did not make it onto the growth rate table or the intrinsic value table. The 4 companies we've looked at that are trading below intrinsic value are ExxonMobil, GE, ConocoPhillips, and Google. Coca-Cola was obviously trading at around $64 per share with an intrinsic value of $22 per share. So that's not good enough to get them onto the intrinsic value table. And they have a growth rate of around 6%, which also isn't good enough to get them onto the growth rate table. In terms of profitability ratios, we can see Coca-Cola had a 57% gross profit margin and a 22% net profit margin, good enough to get them into the 6th place spot on our table here. Adobe and Microsoft still hold the number 1 profitability spots at 89% for Adobe and 37% for Microsoft. And then lastly, in terms of stock performance, over the last 5 years, Coca-Cola is up around 51%, not including their dividends. And so that's not good enough to get them onto the stock performance chart. Tesla is still doing the best at 781% over the last 5 years. So compared to the other companies we've looked at in prior videos, it looks like Coca-Cola is doing really well from a profitability standpoint. But in comparison to the other companies on all other fronts, they are not doing as good as the companies we've looked at. They're currently not trading below intrinsic value per share, as we concluded from this discounted cash flow model, and they're doing pretty much better than all of their other competitors from a financial ratio perspective in their industry. So let me know in the comment section down below what you guys think of Coca-Cola at the moment. Are you guys holding any shares or planning on buying any shares of Coca-Cola? Let me know what you guys think in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.